Hello and welcome to Macro Mondays, brought to you by David Gockstein. I'm your host, Landy, and today is May 11th, 2026, and we're looking at Bitcoin here on the daily to start because we have seen something interesting now happen on the daily. And I think that we are going to see either some further resolution to the upside or we're going to see a trend break pretty soon. So I wanted to talk a little bit about what conditions I'm looking for to see further upside, where the trend break would occur on the daily, if that did occur from here, and or even if we get further upside where a trend break would occur. But then again, we'll take a look at the zones of interest as well. So to start with here on the daily, Bitcoin did run the monthly again at 82.5 here. Of course, that is the monthly close, right? So the swing low of that monthly was the previous and last bull market higher low at 74.4 that put in the monthly closing low at 82.5 to 83K, depending on your chart. On Coinbase here, it was at 82,534.31. So we did see that tested, and we did see a higher low set over the weekend. Let's go ahead and actually get this chart a little bit larger here. When looking at the current trend, you can see that the last higher low is still fairly close. So the conditions for further upside would be getting above this 82.5, taking out the high, just shy of $83,000 on a close. That's where I'd be looking for further continuation up, somewhere in the mid 80s, with the potential for $85,000 to $86,000 at this weekly overhead. You'll have to forgive me if you hear any kind of background noise. Still in progress of getting back to home base, but in this case, this desk is very tiny. But $85,000 to $86,000. Main weekly overhead resistance, that lower high close open with the swing above it at around $89,000 to $90,000 being the next major area of interest on any continuation above that monthly at $82.5 to $83,000. Now, we did get a higher low set on Sunday. It actually closed it on Saturday. It closed it as a technical higher low on a closing basis and a swing basis, and then got that follow through on the Sunday candle to go and test the monthly. And this last higher low is now at right around 79,450, 79,500, depending on your chart as well. And Bitcoin can safely come down and break the trend locally and go into a consolidation. I would say if you're looking for kind of any immediate continuation to the upside from there, if it did that though, I'd be waiting, but you'd want to see it holding the $78,000 to $80,000 area here. If it did drop down lower, while getting a trend break, obviously, dropping down lower, we'd be looking right back to the 74 to 76, where we have this higher low at $75,000 essentially. And then anywhere below there, I'd be looking right back to 70 to 72. And that's where the rubber meets the road, so to speak, on some longer term time frames, because if that area was lost, last chance for Bitcoin, in my opinion, around 68 to 69K, you'd need to see it hold up and start getting closes back above the 70 to 72 level. Otherwise, it risks retracing all the way back to what is the low of this move up, but also the weekly low at $65,000. That would open up the 62.5 low side of this tighter range, and potentially even more down to 58 to 60, and potentially even into the mid to low 50s from there. But so far, so good. Bitcoin has shown some strength here. Could it use a correction? Probably. We've seen a little bit of a correction here and there. Just like what we saw back here is something I would be aware of in the 78 to 80 area is, we had the weekend where we put in a higher low. We spiked just about equal highs right into the zone of resistance here, came down, made a lower low, but stuck inside of the $74,000 to $76,000 area. Beware of something like that that plays out up here, because that would be, opportunity to potentially push past the highs and start to test further up. Obviously, if it were to lose this area, we're looking at a wider correction down to that 74 to 76, testing that last higher low below, and potentially more anywhere below there, especially if you start seeing closes outside of $74,000. I would start to look at, not just the swings here, but the major area of interest between 70 and 72. And that is going to pretty much come in line with kind of my thoughts on the Bollinger Band set for volatility here. We can see that we've got the upper third standard deviation. So if we get above $83,000, upper third is right around $85,000 essentially. So 85 to 86 being the main area overhead. If we do see 82.5 to 83 start to break, even on lower term timeframes, I would look right to around 85 to that overhead resistance at 86. If we started to see the trend break here, the uptrend has been sitting nicely, on close opens, even recapturing on the close open that lost the basis band or 20 simple here. We were looking, essentially up, but if it starts to break below there, get below 70, 76 or 78, then that starts to rope in, the high side of the 74 to 76, right around that higher low at 75 to 76. So anywhere below there, it's expansion into downside support, 74, 72, 70, so on and so forth. So far, so good. It's good to see strength in Bitcoin. I hope everybody's enjoyed the ride off of the lows, especially that nice higher low in the weekly at $65,000. And when looking at the weekly, I mentioned that we did want to see closes above that 80,500 to 700. We did get that. And now it's all about the potential for continuation. And this is still a back test. This is a back test or a retest or a bearish retest or whatever you want to call it. This of the breakdown, right? The actual overhead resistance, is, the structural lows over here was the structural highs over here. Now it's the lows to the highs where we saw the consolidation that did not close below $86,000 until the breakdown. We got the swing right to it, the open, retest, and then down right into the thick of this area over here. So realistically, Bitcoin is not out of the woods. This is all bearish retest territory until it takes out this lower high up here on the weekly. And that would be, taking out the higher low over here, which would be your 93.5 by the upper second standard deviation to 96, and then starting to push on and start getting closes above $98,000. And realistically, is that something that is a possibility for Bitcoin? Yes. Is that the setup right now? No, it is not. In fact, the setup as it stands right now, even if it does come up and test some of this area up here around the 86 to 89 or even 90 and swing above, is more likely to result in, a correction back down. Then we gauge it based off of this higher low down here at $65,000, right? So for those that are pushing the FOMO narrative of you missed it, even if it is going to be the end result being a bullish structure that comes out the other side of this, even though this is all bearish retest territory, there's plenty of opportunity on the next big move down. And the next big move down in Bitcoin, no matter where it comes from, is going to be very telling as to if this structure down here has the potential to not just become a major low, but the potential to become a macro low. And that's going to really, I think, start to solidify in terms of the possibilities on the next bigger correction on the weekly time frame. The weekly time frame still has some juice, by the way. I want you to pay attention to any moves back down to that 74 to 76. Why? Because that's the basis band right here. If it starts to lose it from a volatility perspective, all the way down to the lower first is safe area, but it's also all retest back of that low side structure around that $67,000 area. And that would start to look not so good on the daily and lower time frames. But, if the further that Bitcoin gets away from the $65,000 higher low, the more chances that it has to, the better chance it has to put in a higher low, from a correction, from here or higher. So the further that it can push up, the better for the next bigger correction down. I would be aware of the bearish outlook, though, on the band set here. So even if this was going to become a macro low, I think this is going to take a while to work itself out and actually carve it out to become a macro low if that were going to be the case. If not, the actual more probable scenario is lower, even if it is just slightly lower than $60,000, at least as it stands right now. Don't fade the upside move until we start to see, the trend crack on the daily, and then gauge it level by level. And then we'll take a look at the weekly later, whenever that does occur. Now, for the rest of the markets, let's go ahead and take a look at oil. Oil is what everybody really should be watching. And oil has, on the weekly, put in that higher low structure and then a lower high structure. And it did actually confirm this lower high structure, which is a consolidation look. So it's really about the dailies right now with the sideways consolidation inside of the big swing to 119.50 and that low at 76.73, right? It's just a bunch of inside bars on the daily here. And in this case, we do have a trend break to the upside. So this smaller downtrend is now broken, and the potential for a higher low is now really in play, right? So we do need to be aware of this 90 to 95 level. You want to see closes below there if you're looking for risk on to continue and maybe even get more aggressive in traditional markets and maybe even for cryptocurrencies. And in this case, I would say anywhere above, though, 90 to 95, oil's kind of setting a floor in and around that area for consistent closes, barring this larger move down. And I've mentioned this over and over and over again, and that is, if you're looking at the situation for the current conflict or situation occurring with the United States, Israel, and Iran, it's less about the kinetic action in and around the strait, right? There's been very little traffic, even if you're, looking at like, hey, there's been more traffic that's been reported because they're turning off transponders and turning them on the other side. Great. Doesn't matter. It's not normalized traffic flow. And what we've seen is the supply chain for energy, oil and natural gas, has readjusted and has become a bit normalized now, or is getting more normalized. In terms of even that region for UAE traffic and, of course, Saudi traffic on either side of the strait, right? So on the other side going out towards the Red Sea, and then on the other side of the blockade that the United States has right outside of the strait is where you see the UAE is pumping, right, to port. And when you look at the, essentially the flow of where ships are going to the United States, and we're getting normalized traffic patterns. So what I'm saying is if kinetic action kicks off in that area, again, we could potentially see oil prices rise aggressively. But if there is no strikes that affect the Saudi or UAE infrastructure, I believe that they would be very short-lived. And, that would be essentially a trade to, back to the highs essentially, or higher, if there was kinetic action that kicked off again. But if we did see supply disrupted via strikes, Iran going full death blossom mode and trying to damage infrastructure in Saudi Arabia or the UAE, then I would be, looking at the floor continuously getting set higher, because that would have an impact and disrupt the supply side right? And demand has remained consistent, even though there is quite a bit of demand destruction occurring in Europe and Asia. Not so much in the United States, but we'll see if core CPI comes out tomorrow, and we're starting to see some of the effects of inflation working its way through from CPI to core as it works its way through the system, because core knocks out the more volatile, shorter term stuff, but it does work its way through the economy in terms of inflation. And we'll see if that starts to get sticky. But as it stands right now, it's not really that big of a deal for the United States. It's more of a big deal in Europe and Asia. But we'll see how the numbers shake out tomorrow, in fact. And that's also when Kevin Warsh is supposed to go in for his first confirmation hearing. So we'll see how that goes as well. And for oil, I'd be watching the 98 to 102.5, anywhere above there, 105 to 107, above that. I'd be looking 110 to 112 initially, and then right back to the highs, 115 to 120. And I would very carefully watch the 110 to 112 area around this high that came in at 111. If you start to see 102.5 start to get closed above, if we haven't already tested 105 to 107, and then up to 110 to 112, I'd be looking for that very quickly. And then right up to the 115 by the upper third. Any closes above there, we're running the highs and likely higher to fill out this area between 115 and 130 for WTI. Anywhere below 90 to 95, you want to see breaks below 90 where the lower first standard deviation is, and then closes, more importantly, not just swings, but closes below this 88.66 to really start breaking back towards the low side here at the 84 to 86 level, and then potential expansion down to 76, 78, probably even roping in the mid 70s there. If we saw that pretty consistently, I'd be looking right back to the main support zone. Excuse me. 58 to 68, being the big area. We saw no monthly closes below there. That was our cue that this was going to get interesting to the upside. Now, when I say no monthly closes, you'll see that we got daily closes below the bottom side here at that 57 down the 55 region. But, it's all about the closes, baby. And trended down and sat right on that 57.30 area for WTI. I might actually, in this week, give you a little bit of a history lesson about the region and some of why Saudi Arabia is so important in this particular conflict and not really being talked about, and why it is very important that it's a very big deal, a much bigger deal than many are making it out to be. It's bigger than pure numbers with the UAE leaving OPEC, and why the Saudis will likely do anything they possibly can to keep oil prices down. But that is something that maybe I'll talk about a little bit later this week. Might even do a dedicated video about it and just, talk about it and show the oil chart and stuff like that. So let's go ahead back to the daily. Let's talk about traditional markets, and let's talk about Dow. So Dow, did get its open below this magical line by the upper first standard deviation, but then closed back above, kind of opened right on it, right? So right there, that 49,645 or 650 area, if you will. On Thursday last week, we did get a nice little sweep and sell off from the high side structure, but realistically, anywhere above, 50,000, 50,130, I would expect the highs to start getting run around the 50,500. Any closes above there, we're looking for expansion. That would be in around the upper third standard deviation. I'd be looking for expansion toward 51 to 51,250 pretty quickly thereafter. Any kind of drop of the last higher low, I would actually give it some room. 48.7. if it did even make it to this low, I'd be looking right towards 48.4, 48.5 by the lower second. Anywhere below there, it's expansion down further to the upper 47,850 to 48K. Probably very quickly if that were to occur. When looking at NASDAQ, we got our move up again towards that upper second standard deviation. 29.5 is one of the bigger areas overhead that I would pay attention to. I don't show it here, but I'll maybe pull some fibs later this week and show you. But 29.4, essentially 29.372 here. Not bad. Anywhere above there, I would be looking, 29.5 to 30,000 up by the upper third standard deviation. Anywhere below the upper first standard deviation here, yeah, this is right on the top side. This looks like it needs to correct soon. Probably sooner rather than later, but I think it would be a healthy correction, even if it did last like a couple weeks. But 28.3, look for a gap fill down to 28 even. I mentioned this on Friday. Anywhere below there, start looking towards that basis 27.4 to 5 by the basis band, and then it's all about this higher low at 26.9. Anywhere below there, I think it's fair game. I know there's structure over here and around the 26.5, but I think it's fair game down to 25.8 to 26.2 for a retest. Other than that, we're going to have to go look at SPY, which hit 740. I talked about taking it 5 points at a time. We got 740. 745 to 750 is in the cards. You can see the upper third is right there. Just above 750 at 752. You could even rope in, like, if we start to see this closing above 745, you can probably pretty safely rope in 750 to 755 pretty quickly thereafter. It's all about this upper first standard deviation. Anywhere below, right around 730 or so, 727 to 730, I would be looking for a gap fill down to that 720 to 725 region. Anywhere below there, pay very close attention to 715 by the basis band. If that is dropped, it can save itself in the 700 region in and around here by the lower first. But I'd be looking generally 695 to 700 initially. Anywhere below there, 680 to 685. And I mentioned a lot of people are looking for like a 10% correction, but it's about where does it come from. I've mentioned this quite a few times. A lot of people getting absolutely wrecked getting in front of a freight train, right? Like the markets like to grind up, right? So, the volatile moves typically are going to come to the downside, is when you're going to see VIX flying. So, don't make a big deal of like they grind sideways and up, right? Like the whole volume is dropping. It's not sustainable. No shit. Like the volume is going to come in when we head to the downside. What am I looking for? What am I looking for again? Oh, price range. Yeah. Like, if a 10% was to come from here, then you're looking at a gap fill essentially. 10 to 11% would be a gap fill all the way back to like 660. A lot of people looking for it from here. Could it come from here? Who knows? I don't know. That would be quite a big sell-off. I think that it would be a healthy sell-off if it did happen from here or higher. You get more towards the 10%, you're getting about a half gap fill from here. I'm not necessarily looking for that right now, but just pay attention to daily structure, right? Whenever we see the high put in, it's all about the last higher low and does it break structure. Last higher low is at 715. So it's got a little bit of distance on it. Can it make that distance up in one candle to the downside? Sure can. But it's all about when does trend break and then, where do we see lower highs come in? And so far, just enjoy the ride until we start to see the trend crack, right? The trend is your friend until the end of the trend. When the trend is unclear, everyone's in fear. But right now the trend is very clear and it's to the upside. So I wouldn't get in the way of it until we start to see the trend crack and then we gauge it from there. So that's kind of my takes on this stuff right now. Not too much different from Friday. I would keep a close eye on, kind of how the bond market reacts to Warsh and Dixie and a whole bunch of other stuff. Dixie's still sitting right on that support area and kind of chopping around. So Yeah, there's not much of a clue to be had on Dixie. If oil starts to spike, beware of Dixie, I guess, above 98.60 rather. That'd be a downtrend break. So coming off of a area of support, but it's a wider area of support. We'll see kind of how things turn out, and just keep an eye on oil. And again, I would heed what I'm saying about potential conflict if it does kick off again. It's all about supply. If supply is disrupted via strikes into UAE or Saudi Arabia that actually substantially damages the ability to pump oil out to port and load those ships, that's where we would see things, substantially maintain higher prices. But if we get any kind of conflict that kicks up again, but we don't see that, and we see oil ripping back to the highs or something like that, I'd be looking at that as a shorter lived trade, and then come back to it later. The floor is set higher right now globally for oil, so the market is grappling with that by rotating into risk and making a lot of money. So when that trade is arbed out, and that arb starts to get squeezed, you'll see an unwind. Could that occur with oil headed to the upside? Sure. And if it breaks down, I think risk continues and we get smaller corrections. All right. That's just my idea behind this stuff. The chart is the truth. Watch the chart and watch the trend. And I'm going to leave you with that. I hope everyone had a wonderful weekend, and every mother out there, I hope you had a happy Mother's Day. I hope you like and share this out there with everyone. It really does help me get my message out about what's going on in markets. And hopefully you learned something. And if you did, I hope you do like and share. And I hope you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that said, Landy out. Take care.